Hello, and welcome back to iCalculator. As we wrap up our deep dive into Pakistan's tax landscape, today's spotlight is on the all-important task of filing taxes. While it might seem daunting, with the right guidance, it becomes a straightforward endeavor. The tax year in Pakistan is a crucial starting point. Spanning from July 1st to June 30th, this period dictates the financial transactions, earnings, and deductions that will shape your tax obligations. Before you embark on the filing journey, it's paramount to have all your essential documents in order. This encompasses salary slips, bank statements, and receipts for tax deductions, among other financial records. In Pakistan, the choice is yours. File your taxes manually with traditional paper forms, or embrace the convenience of electronic filing through the FBR's online portal. With the digital age upon us, many are gravitating towards the latter for its ease and efficiency. Now, let's talk deductions and credits. As highlighted in our previous segments, Pakistan offers a plethora of tax deductions and credits. Leveraging these can significantly diminish your tax liability, so ensure you claim what's rightfully yours. Once you've meticulously filled out the necessary forms and double-checked all details, it's submission time. Timeliness is of the essence here, as delays can lead to penalties. Post-submission, you'll either find yourself owing tax or being in the pleasant position of expecting a refund. For a deeper understanding and tools to assist with the tax filing process, our iCalculator website remains at your service. Continuously updated, it's your go-to for the latest insights. The link, as always, is in the description below. We sincerely hope this series has demystified Pakistan's tax system for you, empowering you with knowledge and confidence. We hope you found this video helpful. If you did, be sure to subscribe to our channel, like this video, and switch on notifications to ensure you never miss an update.